Silver touching $71 an ounce. Incredible. Everybody wants to talk about silver, but if everybody wants to talk about silver, we're going to talk about gold, because that is the way more interesting precious metal. You got to see these charts, plus two gold stocks that triggered really promising buy signals yesterday. Let's get right into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. So everybody wants to talk about silver. I get it. It's up to $61 an ounce. Let's not beat around the bush. I would have never thought that we see 61 in 2025. That's incredible. Now, it's artificial because of the institutional short squeeze. And we know this because we can compare the price action in silver to the price action in gold to the price action in platinum. Palladium not so much, because palladium, as you know, primarily has more of an industrial use case than silver or platinum. Gold, no industrial use case except for jewelry. So silver does its own thing. It's not that interesting to me. Why? Well, we can't generate really any alpha right now. We know what the silver trade is. The silver trade is be long, hold on to your pants, don't short, and get out of the market, get out of the way, and let the short squeeze do its thing. That's really the play in silver. And any bigger pullback, you buy more silver, you buy more long positions. It's pretty simple. It's kind of the game plan that was Nvidia at the MacEwen in like 2023. Same thing, just in the commodity sector. So there's really no edge for us here. Now gold looks very different. And this is why I'm more interested in gold right now than in silver. And here's why. This is what gold looks like right now. You're very familiar with this chart. If you watch this channel, I have identified these zones. I'm not going to go over them again. Just go back, watch the videos, or even the smarter move, hit the subscribe button so you don't miss these videos, so you know what's up. You see the fairly new zone that I drew in here. This purplish zone right here, that is around 4,190, let's say 4,000. It's a little bit of a range, but I didn't want to convolute the picture even more. So make it simple, 4,200. And as you can see, that was a pretty accurate analysis, because we have been hovering around this level now for the past week. We can't separate ourselves from it. We don't really fall below it. We don't really go above it. You see the big red candle that happened last week right here, where we tried to break out and just got sold off and pushed right back down. So we know this is a really significant level. We break below it, that would be negative. On the upside, nothing really happens until we break the purple line, the number 2 level. If you don't know what the number 2 level is, again, go back to the older videos, hit the subscribe button. It's pretty easy, so you don't miss these videos. Here's what I find very interesting is, if we zoom out, after we broke out of the long consolidation here with the 1, 2, 3 breakout pattern, and we broke out at the end of August, beginning of September is when number 3 triggered. We had the run up, bull run, then we had a pennant formation, this downtrend and this uptrend. And we broke out, but look what happened afterwards. We actually have really weak price action after the breakout. And I didn't expect this. If you remember, I came here and said, hey, I called the intermediate high in gold here, and I was 90% sure that's what it's going to be, because you can't be 100% sure in the market. That's impossible. 90% sure that it's what it is. And then we had this breakout, and I said, well, I think we should start opening up some gold positions because we just triggered buy signal 1, just in case. I'm now like 66% intermediate high, but 33% this was the correction already, and we're going higher. And then obviously this is shifting to 40-60, meaning 40% intermediate high, 60% we finished the correction, we're going up if we would take out buy signal number 2, which hasn't happened. And this is the interesting part in gold. This is really weak price action. And this is interesting because this is different to A, what we see in the silver market, and B, what we've seen of gold in the past, which after it broke out of a downtrend, after it triggered buy signals, which it did here by making a higher high on the close, on the daily, on the close, we got strong buying pressure and strong buying action. Not this time. Went right into this sideways action around 4,200. So we got the two lines, the purple line and the pink line, perfectly in a technical analysis. This is what all the action is about in gold right now. Everything else doesn't matter when it comes to the charts. Now, what does that mean for us? This could still be a bull flag, but man, that's a weak bull flag because we didn't really have much of a bull run. We had like one big green candle. That's it. And then we got rejected of it right afterwards. Or this could be a warning sign that there is really more consolidation to come, more downside to come. And we know by now, because of the central banks buying, because of the heavily underinvested institutional investors in the US buying, because of the new doctrine basically led by Morgan Stanley with a 60-20-20 portfolio, that there is a lot of buying. So the consolidation will really be a consolidation over time rather than a consolidation over the price. Meaning if I look at the gold chart and I add the 200, I've said since we started this that my target for the correction, if things go a little haywire in the market, would be down here to 3,500, the retest of this breakout, the old all-time high, which would make sense. And that's still possible. And as you can see, because we have the 200 here, we have two convoluting points. We also have the middle of this uptrend channel. I mean, just extend this here for you so it looks a little better. But you get it. So we have three factors right here. But we look at the price action that we have seen in gold in the past month. We look at the price action in this correction right here, where I predicted the breakout really well with 1, 2, 3 breakout signals. I had this one well. I missed some other calls in 2025, but this one we got super right. I think this zone, these old lows right here, around 3,940-ish, that's probably it for this correction phase. But if this lasts for another month, month and a half, we have the 3 months time duration that's adequate when you call an intermediate high, then we're fine. Remember, this last correction, it basically lasted from the high here in April to the end of August. So that was May, June, July, like a 4.5 month-ish correction. So that would make sense, right? In a bull market, the corrections usually get a little shorter too, because people are getting anxious and want to get in, especially if it's a correction over time and not over price. However, we're gonna have a decision coming in gold, because we see that this uptrend line, which is the important and more important line than this blue zone right here. Why? Well, because we have violated the blue zone here and here, right? We keep hitting it and keep bouncing back up, so it has some significance, but it's not as significant as the uptrend. So even if we go sideways, basically right before Christmas, we're gonna see a decision on the uptrend, and then we see where we go. Will we get a bounce of it, like we did here, that led us all the way up to the break of the downtrend? Will we get a bounce of it here, which led us all the way to the downtrend, or formed the downtrend here? Or will we break below it? And then things get really interesting. So let's take a look at a shorter time frame to know what we see here. Also, quick to point out, RSI, it still looks fine, right? We're still in an uptrend here, but it's clearly losing dynamic, as you can see. So let's go to the hourly, which is as low as we want to go as swing traders, and zoom out a little bit. And let's ignore it. This. And we can clearly see, man, we got the purple line right, perfectly set. 4 times we doinked off it and couldn't get through it. 3 times in December. That line, the number 2 buying zone, we defined that one perfectly, and as you can see, the pink line below it also really strong. And then obviously the blue zone that we talked about. But the number one thing we see, if we basically look at December, is we are losing upside momentum in gold. That's really obvious to see. There's no downside pressure, we can clearly see it. But what we can see is, except for this one bull trap right here, which in the daily is the big red candle with a long wick, we are losing momentum on the upside. Now, these are really small price ranges. But again, it's important for us to recognize that we have this lower momentum. So what does that mean for us? That means that we may still get a chance to get some decent entry points in some gold mining stocks. And let's take a look at 2 that I really like so far right now, and that are small enough, this is important, small enough to do their own thing, even if gold just keeps going sideways or goes down for a short-term correction. The first chart I want to show you is MacEwen Mining. An excellent chart. Strong bull trend. We can see the uptrends are starting to steepen. That's what we want to see. And look at this. We closed above this resistance zone yesterday. Now we need to confirm it, but matter of fact is, this is indeed the highest close that we have had since October 24th. So that is really bullish. This is a great looking chart. The market cap of MacEwen is like about $1 billion. So this one it's big enough for institutions to be in it, but it's not big enough that it's going to be a heavyweight in the mining ETFs and therefore going to get dragged down if the gold price doesn't go anywhere. This one can go its own way, and as you can see, it has strong momentum. If it gets going, it gets going. I really like this. And the other one that I like is an old, if you follow this channel, you've known Contango ORE for a while, and we finally have the breakout, and it is confirmed yesterday. This one looks great. How great? Well, let me zoom out for you. Downtrend broken, bottoming formation, finished with a breakout, and the breakout right here. It's happening. So it took a while. We're a little early on this one, but man, look how good this looks now. This is ready, and this is like a $400 million company, right? They're doing their own thing as far as the chart is concerned. We're talking, where are we going? We're going to attack the all-time highs. Maybe we see a retest. Yeah, that's possible. If the gold price goes weaker, that would be a really interesting entry point for this stock, because confirmed breakout. We love this pattern. This one is perfect. As you can see, we have a W bottoming formation as well, with a second low higher than the first one. I mean, this is textbook breakout. So that's it for today. Again, this week, we're going to talk lithium. We're probably going to talk uranium. We'll see what else the market gives to us. But get your watch list ready on the gold miners. We might get a good chance in gold that we might not see in silver for a while, as far as getting into interesting mining stocks that have big upside left, because gold will go much higher. That's it for today. Talk to you later. Bye-bye.